What's up, everybody? It is Thursday, September 26th, 2024. Oh, anyways, there's a little behind the scenes. Yeah, so today, very interesting stuff going on. Coming at you with another video. The China is all the rage. The China, I feel like Trump. But big move today, all about China again. Some interesting news this morning. David Pepper, who is a prominent, very famous trader, said buy everything basically in China. Don't be sure, buy the futures, buy the stocks, buy everything. They're for real. It's actual real stimulus. So China added 8% its gains. The market actually peaked when he was speaking, and it traded very well all day. We'll take a look at the chart, but on a longer term basis, not the intraday. But yeah, things look good there. It's this everything rally is on. Bitcoin broke 65K. Let's take a look at the charts though, or at my sheet first, and we'll see what really happened today. So let's give it a second here. Share screen, booty boppy. So yeah, this story, that's what's really been overtaking the globe here, if you're paying attention. So China leaps another 8%. It lifts EEM 3.5% on its own. So just a magnificent move. These things are hitting 52-week highs. China is actually 3 or 4% away from hitting a 4-year high. So this market for China back in February 21, the U.S. and China, we were all reaching, new all-time highs together, and China has really fell off the map in the past, since that time, since 21. So this is nothing. There could be much more upside if you look at the charts. Maybe we'll do that longer term today or another time. And new all-time highs, nothing to sneeze at here at home. New all-time high for the SPY this morning. We did get closer to that mark. Like I said, I actually think that we'll look at the intraday. We settled at 572, exactly in the range that we expected. I think it's getting a little bit heavy. I do have, as I said before, the accumulation phase ending on or around September 25th. I see it's ongoing here, being extended since it's up plus green rather. It's adding gains that gets extended. Sometimes it's 15 days, sometimes it's 18, sometimes it's 21. Momentum is momentum. So it's sometimes it is art more than science. So, but gold, same exact story. It's getting tired to me. Just saying it. Gold new all-time high every day. Industrials, materials, India, much more too, communications, different parts of tech, IGV, which is a very important index. So let's take a look first. We'll get into all these moves just before we talk about it. KWEB, massive move today, one of the biggest. Chinese internet up almost 12%. After the Tepper news, some of these individual companies, massive, big movers today. ASHR, like I said, that's very equivalent to FXI, added 8% today. South Korea up 6%. That's absolutely just extraordinary. Like I said, EEM is the basket, up 3.5%. And Eurozone, taking a look at that, up 2.5% or so. Down, energy still getting absolutely no love. I tried to keep this not as correlated, but it was really difficult. So real estate got hit today. The oil patch, XOP, the producers got hit 2.5%. Wider XLE, which has been a pretty good area to be in, that's down 2%. And then oil itself, which we haven't seen a lot in the chart being highlighted because it hasn't really been getting liquidated. Today, it got liquidated quite a bit, down 3.5%. So no bueno there. And top moves of the absolute week. Yeah, China internet or FXI here in the broad country up 17 to 21%, depending how you look at it. So these things are adding, obviously with a lot of volatility, but on average 3% a day. So absolutely crushing it. Also uranium and the copper miners up 11%. So those commodities are super well. So let's take at we'll go to SPY first. It's an all-time high here at home. Congratulations. Go look at your 401k. So similar to what I said before about FXI peaking, during the Tepper speech, it was global markets period. Here we peaked at 9 a.m. and actually did not trade so well. China traded really well all day. US, not so much. We actually could not get above water essentially until the 2 o'clock bar. We were closed above VWAP here around 572.30, ironically exactly where we closed, which was just exactly at VWAP. So one for the good kids, I would say there. You saw the NASDAQ have an even better day, up 75 bips, and the Russell was up 50 bips. Volatility hung in there. So larger picture, as I said, we're getting a little toppy here. It's new all-time high, so never want to get steamrolled. It could go further, of course. So 576, 577, something like that. But I do think this was the extension, as we were talking about yesterday, from 910, 911 up to here and this should be coming up for air quite soon here. But I do think the momentum, as I said, will carry it. I don't see the sell-off over the next 2 to 3 weeks getting any much worse than my target's 560, 561, right around here. So not a horrible reduction of about 11 points. All right. So that is where we're saying on our market of SPY. So let's look at, I mean, some of these are obviously going to be repeats from yesterday, but they are the talk of the tape and the bell of the ball today and this week. So Chinese internet, this thing is getting further extended. This is absolutely just absolutely amazing. 52-week highs. It looks like it obviously right here was trying to target this May high. This 200-day moving average, obviously you're going to start to curl up due to all the inputs here coming in much higher and not just a little bit higher, $27. The inputs coming in at 32. So if it just trades here for, a week or two, and the candles to me, especially with like Tepper comments, this isn't done. So I'm actually going to do something rare here that I do on the program. So I'm going to zoom out here to see how much more there is to go. As we were talking about, this was a completely different marketplace in 2021. So screw it. I'll just go to a 5-year chart. So look at this longer. This is a 200 bar moving average here. So these are all weekly candles now. So we have to stretch out. So this is where this Baidu, this basket has absolutely peaked. February 2021, that was, right after the COVID crash and such. And then this really started coming down. It really lost its legs here in July 2021. So I'm kind of drawn to that spot as a longer term. This is a massive candle though. So going out, the next point of resistance is going to be these January 2023 highs at about $36. That's 10% away from here. And then you have this rolling significant. Please share the charts. Oh, I am sorry. Oh, my bad, man. Thank you for the feedback. Dang. Sorry, you were just looking at me the whole time? Double dang. I'm sorry, I threw off. All right. So here, from the top, props, thank you. So as I said, so February 21 were the peaks. I'll just continue going. So just doing visually, the next resistance point is these January 23 highs here at $36. And that's 10% away or so upside. So you can make money off that, as well as I'm looking at the next point as the rolling 200 bar or 200 week moving average here. That's at 39. That's an additional $10. So when people say, the trend is over, there's much more to go if this actually does have a trend change, which I think it actually is having. So this is an area to very much be aware of. I do not want to chase it here, but as a trader, these are frustrating situations because you could take a little small chance and you get an up 10% upside potentially, but you can obviously mean revert and go the other way. I would love an entry in this group at 27. It seemed very realistic, just a few days ago. But how quickly the world changes. So we'll see if the world bids this up overnight and so on. But an entry around 27, if you can get it in the next 3 weeks or so. Obviously, the world's not ending and you can't bid this anymore or something, right? So if you get it around 26.70 to 27, that would be a great entry for KWEB. You know what? Actually, it's kind of funny. It's going to be repetitive because the rest of the chart's going to be all China and energy and stuff anyway. So you didn't miss much. So let's get from the top, I guess. From next, ASHR. This is the broader market. This is very similar to your FXI. So I'll keep this 5-year up for now. So look at this monster bar. That's absolutely amazing. And you're coming off basically the lowest period that this has been valued, very close to the January 2024 lows of $22. And this thing's like a rocket ship. I wouldn't say anything's meaningful resistance until next going forward, 29, the July 23 highs. And then after that, it's going to try to make a move towards this 31. I think it's going to be a magnet towards this over time. So again, a great area to be in. I don't disagree with Tepper. Buy everything is what he said this morning. You can look it up. This has just come so fast and is a volatile country. I understand if you can get in around 23, 24, that would be wonderful. Maybe there's some global volatility that takes it down. Who knows? But that would be a better entry. But this is a frustrating area for a trader. You can try and get in at a very expensive price and hope it, obviously marches on a tad bit more and get in the train and just take it to the next stop. Or you could have a more managed approach. I would love to, be a little patient with this and get around 23.5 or so, or maybe 20, even as high as 24. But we'll see. So China, they are bidding it today massively. If you have a ticker or anything you want to look at, I will single stock or ETF or otherwise. Pop it in the chat and we will take a look at it. I'm still feeling a little bit under the weather, Before we look at South Korea, yeah, I had on my sheet by XLP, the staples. They're looking like they are. I did not get filled. I'm probably going to do it tomorrow. And I did not short the uranium. Uranium is one of the charts we'll look at after. I just wanted to mention the staples, though, just as a trade. So I do have on my paper by XLP on the week of September 25th. So those are looking good. And I don't own that part of the market, those Walmarts and Procter & Gamble. So I like the way it's going to fit the portfolio, and I like the weighting of the XLP as well. All right, so here's South Korea. We'll go back to a 1 year now. So yeah, this looks a little rich. This hasn't gone absolutely. All right, I'll take a look at that for you. So yeah, this hasn't gone absolutely just catatonic. I can already tell that T-Mobile's absolutely on fire. So I'm gonna say anyway. We'll look at it in a second. So this has gone, this has had a tug of war here since early August, South Korea, and now it's, you can just see through this W shape from the 52-week high to here, and there's your W formation. I think it could have a little bit more to go. It looks a little bit exhausted. I see, kind of a similar thing, maybe ideally like a China. Maybe this should come down to like the 64 mark. You see it's very meaningful for the past year, 64.22 to be exact. For South Korea, that would be a $3 consolidation, most of the give back of today. So, but be careful. There's a lot of momentum in these trades. This can obviously, if there's an emerging market, rally as it continues to be, it's going to try and take out its 52-week highs as well. The valuation will lift the boat as it were of all different ships. So that would take us here to 69.5. So that's another $2.50. That, yeah, it can always obviously do that before it comes down to like 64 if it does. So that's that. Let's take a look at the broader EEM. So, this kind of goes into the broader picture of what I have with the overall markets. Just a little bit toppy. Give it a couple weeks, and then you're going to see a large rally, I think, going into the end of the year. It's just the Fed's coming into 26, unless something absolutely goes haywire. A third of the globe is voting this year. What could go wrong? But no, seriously, I'm being sarcastic, but I'm so happy I have the positions. I do get invested in the market. It seems high. Everyone's always frustrated in how, they're getting it. How you stick it to the man. You stick it to the man by, you have to invest. One bad thing is it takes money, or not bad thing, but it's sacrificial. You got to put in money, and then you have these amazing returns, like 75, 85% of the time in the market. So that's how you get stick it to the man who gives you, a 2% raise every year. You get 22 in the market the past 5 years if you're going to the mega caps. So here's EEM, the basket, new 52-week highs, absolutely extraordinary. Not a bad group. But really got its legs underneath it specifically around Valentine's Day. We fell in love. See what I did there with the emerging markets group? But no, like honestly, right then there. Because here before, not so great, just meandering. And then really to get its legs underneath it around mid-February. And it was trading there around 40. And now a very nice move to 47, although much of it has come in the past like a week and a half. So it's absolutely crazy. This you can see actually a more manageable move lower. FXI obviously as it's constructed is heavy on specifically China. They're going to be absolutely exposed. EEM has Walmax and a lot of different global names. So this actually could have a more likely mean reversion, which would take it down to about 43.5. So right around this cluster, this area here would be meaningful. And that would be, $3.20 or about 7% reduction. So we'll see. People think that's the end. And oh my God, the story is over. Sell everything. When really this is just mean reverting, and that would be a great place to pick it up mid to late October. I hope to get the opportunity. We'll see. Okay, and then here's something that's not straight up China. The Eurozone. Haven't looked at this group in a while. So Europe obviously is not China. I don't think that's a geography lesson, but this also looks just a little toppy. My target here was around 52.15. Here with this upper Bollinger Band takes to about 52.15, 52.30, right around there. It could try an angle. This looks like a good strong bar, and look at that, almost identical to the penny. It is 12 cents away from its 52-week high, so it's almost like a foregone conclusion sometimes to me that has momentum. I'm not going to stand in front of that light. So it probably has a little bit more to go, but I do see a consolidation over the next 2 to 3 weeks towards that 51 mark. Again, so very realistic, not a horrendous sell-off. All right, so a lot of strength in the market, those areas. EEM, new 52-week high, as well as China and Chinese internet. Where did they not love the market today? Real estate. Real estate. They did not love today. Rates were actually down today, and real estate was down as well. Let's take a look at this chart. Boopity boopity bop. So this looks right. This looks good because I saw my ITB scan, which is the home construction ETF, getting ready to look good as well. This looks really good. Obviously, this is not the end of this trend. If you were in semis, Bitcoin, and home construction, real estate, home builders, anywhere in the past year, you're crushing the market. That's where the alpha has come from. Those three areas. So you can look it up. It's just math. So right here, this looks great. So this peaked on the 16th at 40. I'm rounding, but $46, and you had a beautiful consolidation here. I think I wrote about this specifically, trying to get to this point if you can get a 5% consolidation, and it looks very ripe. I would see how it trades tomorrow. Opposite of what I was saying for the other assets, this looks like maybe has a little bit more to go. But typically, look at this in terms of the RSI, it hasn't traded weak than this in terms of how it's traded versus its history of closes and opens for the past 20 days in the range. Hasn't traded below that since July 4. And that's before it has this spring and this new almost sentiment change in outlook of what we think of real estate since July 4, America's birthday. So this could very well be a meaningful point. I have the 21-day exponential moving average at 44.25. Look at that. This looks great. I might, let's go to the pen. Oh, I don't know what that tastes like. I think blue ink. So I'm going to write buy XLRE. And these are not, just immediate buy orders, but I look at them first thing tomorrow morning. And I will write September 26th. Sometimes date to me is more important than price. You'd be surprised. So yeah, but not absolutely without. I'm getting the 21-day EMA down to the penny. So yeah, but the target for this as well is around 45.75. So nothing monster here, but a great trend to be a part of as the Fed cuts rates for the next, into 2026. What I'll look at for this is probably a December quarterly, which is December 30th, 31st, 30th, and expiration. I buy maybe like a 46 calls. And then sell maybe next month's 45 calls against it. So there you go on that. So this looks great. I'm going to take a close look at this tomorrow. Maybe I'll buy this and Staples. Staples, I don't know if I mentioned this. Oh, yeah, I did. Oh, I'm tired, man. The cough meds. But yeah, it didn't get filled. Potentially tomorrow. We'll see how it trades. All right, so XOP, we were talking about this. This is a great example about the 200-day moving average and what it means to me. No, but for real, like a psycho. August 1st, this is why I saw this weakness, and look at this bouncing ball to death. So, yeah, it looks like crap. This looks like, I think it's got some more to go, but I do think there's going to be a lid on it right around the 125. So that would be inside of the 52-week lows. Could it take it out? Yeah, potentially. It's a very hated group. You're going to see this through a bunch of our charts, but it should hang in around on the pops to 133 tops, and then the floor should be 125. So that right around there, I could sell, an oil, a strangle. If I believe that for the next 2 weeks, you can get paid, and I would sell the 133, 125 strangle that expires next Friday, and you get paid because it's a volatile group coming off of 52-week low less than 3 weeks ago. So that's an idea. Potentially, but always got to be careful if it spikes in this global, animal spirits, everything's marching on. It seems apparent the Chinese aren't buying oil because this is traded a different way this week. All right, so forgive the redundancy, but they really took it out to only specific 2 areas today. Next one, the XLA. This is an area you have wanted to be in. I mean, this is traded decently if you're going to be in the, the energy area, and it looks crap. The 200-day is still rising, but it has sliced underneath it. This looks like it's got a floor similar to what I just said. Obviously, it's going to be correlated to the XOP, which is a weaker index, but this should go down to about 83.5, 84 over the next 2 to 3 weeks. I don't think this group is going to have much love. This was the love from 9/11 to 9/24. This is going to help airlines. I don't know if you saw, but airlines had a huge pop today. They love cheap oil, of course, and this looks like it's going to continue. You're seeing like $2.99. I don't know where you live at the pumps, so you're going to see this too, and that can also, push consumer sentiment, whatever you want to frame it. But the consumer's alive and well, and all that jazz. All right, that's XLE, and then we haven't looked at this in a bit. This is actually oil, the ETF for oil, USO. So let's take a look. Not a horrendous area. It really looks like XOP has been just a bad area. Investors don't want to throw their dollars on it. USO doesn't look great. It looks really bad since August 30th. yeah, again, no shock what I'm going to say. Bad times ahead, I believe. I think this is going to head towards 66 over the next 2 to 3 weeks. So another $3 down, or another, almost 4% loss in oil, basically to get to, almost 52-week lows, very close, which is not what you would think with, a growing economy and such. You want oil going as well, but, solar and renewable energy, I guess. All right, top 5 gainers of the past 5 days. No repeats in charts because we've looked at these enough. So I will give you the numbers though because it's important. If that's okay, I'll get to you at the T-Mobile thing at the end. Top 5 gainers of the past 5 days. So KWEB up 21% over the past 5 days. Absolutely just remarkable. Almost 4% a day on average. Next is FXI at almost 18% a day. Third is uranium at 11.5. So I talked about this before. Let me just put this in. I talked this before about putting in a short. I said I was going to do it today and cost average. So I saw how it traded today. I was watching it and saw how it traded versus VWAP and everything. And it's the counter is on. So this is day 1 of its trend change. Can it do it? Absolutely. But I'm probably going to, I want to see how it trades tomorrow. I want to see if it collapses. I want to see exactly how it trades versus this 28.75 level, which has been pretty important for it for the year, for the past year in some way. It's been a meaningful level right around here, especially now. So we'll see how it goes. I think this heads, the charts tell me it should head towards 26 in about 3 weeks or so, but that's a heck of a move from here. So I'm not going to put an option position on just yet. This is an interesting one to keep an eye on. Uranium, the 3rd best trade in the market this week, up 11.5%. Here's a chart we did not look at, the COPX, so the copper miners. Let me guess. It's going up a lot, and it has to mean revert. Yeah, so basically getting a lot of the same messages from the charts. This one here at 42.65 is where I see this coming down to in the next, 3 weeks. That would be a heck of a move lower. Always got to be careful about counter trend trading. I want to be with this trade, so I'd rather wait 2 to 3 weeks, let it get to that 42.65 mark, and then let's get long. Kind of what I did with Japan. And I'm going to pat myself on the back for this because that's more than doubled now, that option. So EWJ, 52-week highs today. Not even one of the sexiest markets like the South Korea or Hong Kong or the broader EEM basket. So, but again, it's one of the benefits of diversification when you put different stuff on the roulette wheel. You could be really happy with the outcome. So COPX, I see a little bit of mean reversion towards 43, 40, which would be a big move. Again, that's a massive move lower. We'll see. That one would be worth to put money on potentially afterwards if it has that kind of reduction to get in cheaper. That seems like a good opportunity. EM, we already looked. EM is the 5th best area of the market, up 7% for the past week. Almost looks like nothing compared to China. All right. Top 5 losers of the past 5 days, no repeats. So XOP is been the worst place to be, specifically that basket down 5% or a loss of almost 1% a day. Second one is regional banks. The KRE, haven't looked at this one in a bit. I think regional should be, if I'm guessing, looking not so well. They're in this little range here. It looks like they have a slight wedge going off the highs from July, and basically, it's hanging here at the 21-day exponential moving average. I do think there's going to be weakness in this group till 53 over the next 2 to 3 weeks, and then you want to get into this trade. Almost identical of what I was just saying on the last chart. The COPX. So similar. Hopefully get this one a little bit cheaper. I think you will over the next 2 to 3 weeks. I think this one hangs around 56. In the grand scheme, but on big dips, I think this goes all the way down to potentially 53, which it was here during that 9/11 sell-off, but it rebounded well. Yeah, maybe not even as low as 53, maybe like 53.5, and that would be your trigger. So KRE getting hit this week, down 5%. Oil getting hit this week, down 5%. And ARCG, I already looked at that chart, so I'm not going to do that. And ARCG, biotechs are all getting hit. This specific one's getting hit worse. This is the Cathie Wood basket. So ARCG today added 3% over the past week. It's down 5%. So just to see how bad it's been here from 919 7 days ago. It's trading 27, and then it fell all the way to a low of I'll call it 25. So a big move, almost 10% there. I don't think this is going to be a loved group either. I think first stop for this one is about 24.5. So right around here where my cursor is. And I think ultimately on some weakness, if you do get the pullback, that 2% or so pullback from the broader markets, I think an especially weak group like this would go to about 23.5. So another dollar loss to about there. Alrighty. So that's where we stand on that. Oh, and the next one, ITB, we were talking about this. I definitely want to be a part of this trade. I had missed it prior by trying to wait for the picture perfect price, and that was less than I paid for. Let's see how I get in the next one. So I think what's going to happen is over the next 2 to 3 weeks, this is going to get down to about 122, and that is going to be my entry on a target to about 128, towards 130 if it gets towards those 52-week highs again. 129 to be exact. So that's what my game plan on this. But yeah, it's going to be patience for that. I'll see how I do. I will buy it most likely regardless in about 2 weeks or so time. All right. So top your absolute trades of the past 5 days. Long KWEB up 21%, or long FXI plus 17.5%. I say or in the note because those are pretty much the same trade. So it's not really smart if you're in both. Second best trade long uranium. Third best long COPEX. All right. Thank you for being patient out there, CBeebs. Thanks for watching. I really appreciate it. Let's take a look at T-Mobile. This one's been an absolute superstar, and it's been for quite some time. I am a T-Mobile user. I wish I had some of the stock. This has been an absolute crack-like stock, especially since last Halloween. This looks great. A lot of telecom has looked great, but T-Mobile has exceptional management. It's not like AT&T who has billions of debt. They do have some issues, like their long-term debt to equity and price to sales, but it's different. They have a lot more future growth than say, the buried Verizons. They own a lot of legacy businesses. Anyway, so down, barely marginal, down 15 bips today. This looks good. I think this might have a little bit more bullishness over the next week or so. I don't know how you trade this. If you're a long-term trader, if you want to write what your strat is with this, or if you're long stock or whatever options. But this looks like over the next week or so might have a little bit more bullishness towards 210. We'll see, because it's in a defensive space. If I think the market comes off, I'm not shocked that this could do well. But yeah, I see this maybe going with a potential ceiling of 210, which would be a new 52-week high. So this is a very strong group. You can see it from the slope of the 200-day moving average. Lots of periods here overbought. Had a lot of overbought periods in August, again in May for chunks, and then again here from Thanksgiving through almost MLK call it overbought. These are talking like straight trades. This period here from Christmas, I don't know if everyone and their mother was buying an iPhone, but from December 21st to January 19th, it was up every single day -4. So that's just insanity. So yeah, strong group. They had a massive sell here, a lot of volume. I'm not sure what happened here on September 20th, 6 days ago, specifically for this, whatever. But anyways, a little bit of the ceiling here, like I said, could be definitely new 52-week highs towards 210. And then I would see a consolidation over the next 2 to 3 weeks, right around to that 199 level. 199, 200. All right. So I hope that was helpful. But yeah, definitely a great stock, a great place to be in, dude. All right, that is it for me. We will do a big end of the week wrap up. I'm guessing it's going to be, the flavor is going to be Chinese food and emerging markets and uranium and COPEX. So, all right, no problem, man. All right, we will see you later.